Welcome back, everyone. So today we're diving into a company that is literally the absolute bedrock of the modern tech era. We are looking at Tokyo Electron, or TEL as it's widely known. These guys are the indispensable leaders sitting right at the very upstream of the global AI revolution. If you've been trying to figure out how to position your portfolio for this next decade of explosive tech growth, well, you are definitely in the right place for this explainer. Let's get right into it.
You know that old saying about the gold rush, right? The folks who consistently made absolute fortunes weren't usually the ones panning for gold in the rivers. Nope, they were the ones selling the picks and shovels. Well, Tokyo Electron is essentially the giant selling the ultimate high-tech picks and shovels for today's AI gold rush. They build the semiconductor manufacturing equipment that makes AI possible. And wow, the numbers completely back this up. Back on April 30th, 2026, they announced record-breaking full-year sales and net profits. We're talking all-time highs for what was already a legendary company.
So that brings us to a pretty provocative question. Why exactly are savvy global investors aggressively targeting Tokyo Electron right now? It's definitely not just because AI is a trendy buzzword. It's actually because of a very specific equity story, one that combines massive market dominance with elite capital efficiency. Over the next few minutes, we're going to unpack exactly why the market views TEL as such a foundational asset.
Here's our roadmap for today. Number 1, overwhelming presence and record profits. Number 2, how AI demand is directly driving profit. Number 3, astonishingly high ROE management. And finally, number 4, shareholder returns that captivate investors.
Okay, starting off with Section 1, overwhelming presence and record profits. You really have to appreciate the sheer momentum this company has right now. Just looking at the jump from the third quarter to the fourth quarter of fiscal year 2026, sales spiked from an already huge 552 billion yen to a staggering 711.8 billion yen in just one quarter. That kind of momentum is what drove their total FY 2026 sales to an absolute all-time high of 2.44 trillion yen. Oh, and net profits? Those hit a record 574.4 billion yen. They aren't just participating in the semiconductor market, they are absolutely dominating it.
Moving on to Section 2, AI demand directly driving profit.
Now, take a second to process this. 90%. That is Tokyo Electron's global market share in coder and developer tools. These are the critical pieces of equipment that apply and develop chemicals on silicon wafers to print those microscopic circuits. A 90% slice of the pie. That is a monopoly-like grip on the market, and it proves that their technological moat is practically insurmountable for competitors. Basically, if you want to manufacture advanced chips today, you're almost certainly going to use Tokyo Electron. No way around it.
But honestly, it doesn't even stop at coder and developer tools. TEL is capturing the explosive demand for AI servers across multiple fronts. They're seeing a massive wave of critical investments driven by the insane demand for high-bandwidth memory, or HBM, which, as we know, is absolutely essential for AI chips. On top of that, they command over a 50% share in critical edge equipment. And they are perfectly positioned for the surge in next-generation logic and advanced packaging. In fact, sales in that specific area are projected to jump over 60% heading into FY 2027. They literally have the right tools at exactly the right time.
Let's jump right into Section 3, astonishing high ROE management.
Okay, here is the crucial point, and it's a massive number, a 29.6% return on equity. I really want to let that sink in for a second. Achieving an almost 30% ROE, that places Tokyo Electron firmly in the highest echelon of global corporate elites. We aren't just talking about a good number for a Japanese hardware manufacturer. This level of efficiency is off the charts globally, sitting way above the Japanese corporate average. These guys are absolute masters and making capital work for them.
And paired right alongside that sky-high ROE is a phenomenal 25.6% operating profit margin. Manufacturing hardware, it's traditionally a really tough, capital-intensive business. It's expensive. But this margin, this proves that Tokyo Electron's high-value, cutting-edge equipment gives them massive pricing power and just unmatched earning capability. They aren't trying to compete on price. They are competing on indispensable, undeniable value.
All of this high-margin success results in what we could really only call muscular finances. They are sitting on a fortress balance sheet with over 506 billion yen in cash. But the brilliant part, they aren't just sitting on it.
Management is perfectly balancing this huge safety net with aggressive, highly efficient spending, deploying 277.8 billion yen straight into research and development. That is exactly how you secure your dominance for the next decade. You constantly nurture and invent future revenue streams before your competitors even know what hit them.
So what does all this financial power look like in the real world? Well, it looks like these newly completed and planned state-of-the-art facilities in Miyagi and Kumamoto. These are way more than just new buildings. They're the physical manifestation of those massive R&D and capital expenditure budgets we just talked about. They're literally laying the concrete down for their next massive growth phase, ensuring they have the absolute capacity to meet this relentless global demand.
Which brings us to Section 4, shareholder returns that captivate investors. Now for the part every investor loves. They have made a remarkably clear promise here. Tokyo Electron enforces a strict 50% consolidated dividend payout ratio policy. That means they are returning half of their massive profits directly to the shareholders. When you combine that policy with aggressive, continuous dividend hikes and agile share buybacks, it's pretty obvious why the market views TEL as a must-hold, foundational asset for long-term investors. If you need concrete proof of just how progressive this return policy is, let's look at the numbers. For the first half of FY 2026, their dividend was 264 yen. Not bad at all. But for the first half of FY 2027, they are projecting a massive jump up to a 361 yen dividend. They are literally taking those record profits, which are totally fueled by AI infrastructure demand, and putting that cash straight into the pockets of the people who believe in their equity story.
And finally, the conclusion. Owning the infrastructure of the AI era.
To quickly wrap all of this up, Tokyo Electron is the true, undeniable winner of global AI demand. They back up this incredible position with a world-class capital efficiency engine that's generating an almost 30% ROE. And they reward you with top-tier shareholder commitment. They really are so much more than just a manufacturer. They are the fundamental, indispensable infrastructure that is generating immense wealth in our modern tech era.
So I want to leave you with this final, provocative thought to chew on. Is the absolute pinnacle of Japanese technological infrastructure currently acting as the core of your portfolio? Because if you are out there looking for an elite picks and shovels play for the AI revolution, Tokyo Electron's equity story is one you simply cannot afford to ignore. Thank you so much for joining me for this explainer. As always, please remember to review the official investor relations material, keep doing your own research, and happy investing.